Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong area of monthly demand and support and rejecting it to the upside. In fact, from here, all this previous rejection to the downside was created. Then the market broke above the zone, and at that point, since previous resistance in the market, once it is broken to the upside, becomes support, the level started acting as support. The market tested it here as support and immediately rejected it to the upside quite aggressively. Now, we have just seen the creation of a new monthly higher high. So the market broke above the previous high, which was at this level. So in a situation like this, we are clearly in price discovery. There is no immediate resistance level. So we could expect more potential bullish continuation to be created away from this level. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can see a very similar situation. We can notice how the market has been creating higher highs and higher lows. So in a situation like this, what we could expect, so the next natural movement for this market would be first the creation of a correction and then the continuation to the upside, because in an ideal uptrend, you have a market that creates impulses and corrections, every time creating new higher highs, and at the same time also creating higher lows. So in a situation like this, what we could expect is to see more potential bullish continuation being created away from this level after having a correction. So first, we could expect some short-term bearish price action for the market, essentially to create a correction after this massive impulse and then to see the continuation to the upside. Keeping that in mind, let's move back down on the daily time frame, and then we will go and see what we have when it comes to the order flow. Here on the daily time frame, what we can notice is that we just got a massive impulse to the upside followed by the start of the correction. Now, in general, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how at this area we have the 0.3 to 50% and 0.618 Fibonacci retracements, all lining up exactly in this zone. Now, if we look left, we can see how there is no other structure resistance anywhere close to this level, meaning that if the market here will create a correction back to this zone, this could be the perfect opportunity for new buyers to enter into this market, at that point potentially pushing the price higher for more price discovery, because as we just seen, there are no resistance levels around this zone. So any correction would be the possibility to create a new higher low, since this market still seems to be controlled clearly by buyers and not by sellers. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can notice how with the last reports, institutions went from having a net positioning of minus 102.3k net positions all the way down to minus 162.1k net positions. So a massive decrease of net positioning, showing how institutions are massively moving to the bearish side of the JPY. And since all currencies on the spot are traded against the USD, if institutions are shorting JPY USD, in order to do that, they are actually longing USDJPY. And that is why the price has been also pumping to the upside quite aggressively. So if we will see a correction, there is definitely the possibility to see more institutional longing, which at that point could further increase the probabilities of a potential push to the upside away from the level, since institutions have rose their shorts from 90.7K all the way up to 209.4K. Now, moving back to the chart, what would I expect in a situation like this? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also in the description, so you never miss new updates. Now, back to analysis. As I was saying, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential push higher away from the zone, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.